Welcome back to Rockstock Channel. It is Monday, July 7th, and we are back with Chris Evans, CEO of Winsome Resources, which is advancing several plain vanilla spodumene and cesium exploration and development projects in Quebec. Sorry not to have seen you at Fast Markets in Las Vegas, Chris, but glad you could join us for an update. A number of our viewers and followers on X have been asking. 2025 has been another terrible year for lithium equities, but Winsome, which trades on the Australian Stock Exchange, ticker symbol WR1, looks to have been disproportionately hit. WR1 was at 44 cents back when we interviewed you last December and is now down over 60% since then. As I quoted AC/DC in my first lithium-ion bull for 2025, it's a long way to the top. Winsome peaked in early 2023 over $2.20 on your substantial high-grade discovery at Adina, what is still today the fifth largest hard rock discovery in Quebec. And beyond exploration success, Chris, we flagged your astute deal-making by both buying a stake in Power Metals when the Canadian government forced the Chinese to divest their stake, and also in signing an option to buy the Renard diamond mine out of bankruptcy. $1 billion of brand new mining and processing infrastructure for pennies on the dollar. The market initially gave you some credit for Renard. Winsome traded as high as $1.45 just 13 months ago when it was announced. But the obligations connected to that option have since proved an overhang, for which you recently announced likely plans not to exercise the option. We will dig into this question later in the interview. The market has also not given you any credit for the appreciation in value of your stake in Power Metals. We look forward to digging into Winsome's Cesium potential as well. We've noted in the last few months that within the global lithium landscape, the Canada narrative has been disproportionately hit this year, not just due to low lithium prices, but as Trump has attacked both Canada as well as the electric vehicle, renewables, and the overall energy transition narrative. At the same time, Canada had its own election, with Mark Carney replacing Justin Trudeau as Prime Minister. We've also referenced in recent videos that we have been reluctant to call a lithium bottom in the past 12 to 18 months, as many stocks still had traded at relatively elevated valuations compared to the last bottom in 2020. But we've seen some stocks seemingly overshooting to the downside and now trading below replacement value. Winsome is certainly one of those, in our opinion. We believe there's scope for the Quebec spodumene narrative to regain investor confidence in coming quarters. The Sayona-Piedmont merger will be complete shortly, and with it, a $45 million cornerstone investment by resource capital funds. Recall RCF Cornerstone Pilbara's purchase of Altura, marking the last cycle bottom in November 2020. Chris, I've known you since 2018 when you were Chief Operating Officer at Altura. Rodney had a chance to dialogue with RCF, moderating the Canada panel at Fast Markets alongside Sarah Maricel of Rio Tinto and Ken Brinston at Patriot Battery Metals. Rio has talked far more about Argentina and Chile in relation to its lithium investments, but I expect later this year they will give the market greater clarity on their commitment to lithium hydroxide conversion and mining in Quebec, a province in which they already have significant aluminum, titanium, and iron ore operations. As a reminder, RK Equity has been an advisor to and invested in Winsome since before its IPO in 2021. We have also worked as an advisor to Power Metals, in which Winsome holds an equity stake and 100% offtake rights to the world-class cesium discovery Power Metals has made at its Case Lake project in Ontario. But please note, RK Equity is not an investment advisor. This video is for informational purposes only, and nothing should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. In our opinion, a lot of negative news is priced into Winsome's current 35 million Aussie market value, and the overhang worries at Renard are overdone. Winsome has a relatively healthy $18 million in cash. It also holds a 15% stake in Power Metals, which at current PWM price equates to about 20 million Aussie dollars in market value. To date, Winsome has invested more than 50 million Aussie dollars in Adina alone. Add it all up, and WR1 is trading well below replacement value. This video will presume some knowledge from viewers about the Winsome story. I visited Adina as well as the Renard diamond mine last summer. For those looking at the company for the first time, we would encourage you to watch our prior interviews with Chris, the links for which are in the show notes below. For more information directly about Winsome, please register your email at their website, winsomeresources.com.au, and follow them on X at WinsomeRES. And with that long intro out of the way, welcome back, Chris.
Thank you. Thank you, Howard. That's quite a sad story that's painted there for the lithium market in general, of course, and as you point out, to our as it particularly relates to Winsome's how Winsome share price has fared over the last 18 months or so. But it's a pleasure to be back here. Thanks, Howard and
It's
Rodney.
okay, Chris. You've seen some down cycles before at Altura, and you're also the MD of in Mali for what is now Leo Lithium, but the Goulamina mine. So both Altura and Goulamina are in production. There aren't too many MDs of resource developers that can point to projects they've been associated with that are in production. And one thing I didn't mention in the intro, and an analyst at Adamus had pointed out, the Renard option, if you were to exercise it, would make you one of the lowest capital intensity projects, in all of Quebec. But I guess Rodney's here. We'll dig into some questions, but we did want to catch up with you just before Fast Markets. You did put out an announcement in relation to Renard, and then last night you put out an announcement in relation to Adina permitting. So, hi Rodney, and
Hi guys, Chris, great to see you again. I guess the first thing probably you'd want to address is the recent announcement regarding Renard. It is, of course, a great. It offers a lot of optionality to you and capex savings, but one can't do these things at any price, and it does come with care and maintenance costs. So, why don't you just fill us in and the listeners on the logic?
Yeah, that's it. It's a bit of an ironic situation we find ourselves in. As most listeners will know, we have the option to acquire Renard for a total of 52 million Canadian dollars, spread over about 2.5 years. And we struck that deal in the first quarter of last year, when it was quite a different lithium landscape. And I'd say back then it was a fantastic deal. And we had an option to buy it over about 12 months, which was subsequently extended into August this year. The reason we wanted that option is to firstly do our due diligence, and secondly to try and find a strategic partner to bring on board. The reason we wanted a strategic partner is, as you say, there's care and maintenance costs associated with the facility when we take it on. There's $1 billion being spent on it. There is the full infrastructure we need to, that's been operated for the last 8 or 9 years as a diamond mine, all of which we can use in our lithium project. So there's substantial infrastructure in place that requires care and maintenance. And then also there's the ultimate mine closure obligation that goes with acquiring it. In order to give the market confidence we could take it as still a relative junior, we wanted to bring a strategic partner on board. As Howard said, Howard's been to site, and with him we bought, over the course of about 4 or 5 site trips, we've bought almost 24 strategic parties, well-known names from Asia, the Americas and Europe to site. All of them liked the idea. Not one group said we don't like the idea of acquiring Renard, and the idea of making it a very low risk and low capital intensity project by saving about $500 million in capital cost by having the existing infrastructure is a fantastic idea. But the care and maintenance obligations for the next 3 to 4 years while we wait for our approvals is a significant risk at the moment. And so most of the strategic parties who bought to site say we love the idea, but we're not investing further in Canada until perhaps next year or after that. Sort of in line with the general thinking of that supply is going to fall short of demand in maybe 2026, 2027. And so until then, if we took on Renard, there'd be a care and maintenance burden. And in the absence of a strategic party, we wanted to let the market know that we're not going to take this on at all costs, to the detriment of Winsome's long-term prospects and of course the shareholders of Winsome. So we're signaling to the market that we're still looking for a strategic party. We're in discussions with the Quebec and the Canadian federal government about potential assistance there. But if it comes down to it, we won't take it without a strategic party and without some more backing, which leaves a longer-term capital cost increase. But we still got Adina, and Adina is still the 5th largest lithium resource in North America with its own set of fantastic attributes.
Absolutely. And as you say, the Quebec and federal governments have been supportive, Chris, of projects in general and of critical minerals, in Canada. So, that door is not yet fully closed.
That's it. We think they've demonstrated in the past how supportive they've been for various battery materials related projects. For various reasons, one area they haven't contributed heavily to is the upstream, the actual supply of the materials and that gap in the supply chain, internal supply chain, which we think we can plug. So there's a lot of ongoing conversations there. And also it fits in perfectly with the Quebec and the federal government's low carbon aspirations for the future, not only in terms of the lithium, the primary use of the facilities of processing lithium, but there's also a fantastic opportunity to use the Renard site as a carbon dioxide removal hub, given some of the existing facilities and crushed material that's already on site that's perfect for capturing carbon. So we think there's dual purpose there, and the story just doesn't make sense. If we were, if we weren't to take Renard and ultimately it was rehabilitated, that just wouldn't make sense. While 60 kilometers down the road, we're applying for the permits and then building our own facilities, which look exactly the same as what's already there.
That's a great point. And also, you mentioned with Adina 5th largest, but it's high grade, it's low strip, it's coarse materials. So, I mean, one shouldn't lose sight of the fact that in terms of operational advantages and what we like in terms of DMS only, Adina is right up there.
Exactly right. DMS only. First 4 years, it's 1-to-1 strip ratio, sort of 1-to-3 strip ratio the first 10 years. It's an incredible asset, and we think that standalone, it's still an ideal project. So Renard offers benefits in terms of capital cost in the future, but all the other advantages that Renard as an ore body has, of course, still remain. And just whatever happens with Renard, we'll continue advancing that project. As Howard pointed out, we've got a healthy cash balance of over $18 million, and we're one of the few lithium projects, I'd say development projects or pre-development, I'd say, in the world at the moment that are actually still advancing because we have that cash in the bank.
Yeah, I mean, and that's true. And I looked at the latest numbers, Chris, in terms of LFP production in China. And I think people lose sight. Yes, I think from the last cycle and the last upswing, a lot of supply came online because it was too good to be true. Around $70,000, $80,000 a ton, stuff's going to come online. But to be clear, the latest numbers, you're getting nearly 60% year-on-year increase in LFP production in China. So there's still massive upswing. That isn't even, that's still, I think, below 60% capacity. And where EVs are waning a little bit, ESS is going absolutely gangbusters. I don't know if you look at the latest numbers on solar and wind installations in China are through the roof. And, with battery materials where they are and the latest quotes for large scale energy storage projects, you're still getting quotes in the low $50 for the fully installed system. So those are incredible numbers that still make it highly competitive. So we'll see where things go, but certainly demand seems to still be on track. If we could just move on then to your announcement today regarding the permitting. You've got the directive from the Quebec environmental authorities. What needs to be done to submit your EIS?
That's right, we did. I'd be interested to touch later on to see your view, Rodney, on is the demand from this growing ESS infrastructure that's being built all over the world, is the lithium demand actually built into most people's forecasts so far? But maybe that's one for the end, because it sort of interests me. I just don't. It feels to me it's going to catch up at some point. It's suddenly going to hit the demand forecasts, and that may change things suddenly at some point when it does.
I think just logically, the more energy, the more power that the new sources of power that you add on to the grid that are renewables, it's not really, feasible to add those without energy backup storage. So, to risk the sort of supply profile and have whatever you call it, the duck curve and so on, it's likely that you have to back it up, and it's cheap. And if you look at the form factor and the size of energy storage, going over 1,000 amp hours, you're moving to 8, 12-hour storage opportunities. So I agree with you. And I think as long as those numbers are still phenomenal as they stand, and people are maybe wrongly looking at the US and what's going on with Donald Trump, but it's all about China. China in a single year is adding, I think in the first 6 months, has added more solar and wind than the entire solar and wind capacity in the US, just in a single 6 months, certainly a year. So you've got to stay focused on what's the really big market, and the really big market is China. And Oz and some other countries are also, picking up. So I agree, but you have to let everything work its way out of the system, I suppose. So we can chat a little bit more, but let's get back to that to
Yeah,
the
certainly.
permitting.
Yeah, so it's a great announcement we put out today. So we received feedback from the Quebec environmental authorities on our preliminary information statement that we submitted in January, and that describes the project, and it really gives us specific feedback on what we need to do in order to complete our environmental and social impact assessment. And there was the first good thing, that there was no additional information requested from the reviewing authority, COMEV, and they laid out a directive which essentially breaks the project into three parts, which we expected. There's Adina itself, there's the road, and then there's Renard. And there's conditions under each of those that we have to comply with when we're producing the environmental and social impact assessment. We anticipated most of those because they're relatively standard, although the committee looks specifically at each project, but there's generally, we know what needs to be done, hence the fact we've been going for almost 2 years on our baseline environmental surveys right across the project. So what it means is we've got a very good idea now, or we know exactly what's needed to produce the EIS for Adina and for the road, and for Renard for that matter. If we don't take Renard and we continue with Adina and the road, then we know the environmental conditions we need to comply with to produce our EIS, and we can continue with those. Eventually, it'll need a modification if we don't have Renard, but the base information's there. And so that indicates to us we've been doing all the right surveys so far, and we've got a pathway forward over the next couple of years to complete that. So we think it's a very positive step, and it shows that we're now registered with the Quebec environmental authorities, and we've got a pathway forward to keep advancing Adina, as I said before, despite these bad conditions at the moment, so that when the market turns, we're at the forefront of that turn, and we're able to capitalize upon it for our shareholders.
That's great. And then if we can go back to something Howard flagged earlier, Cesium. You've got your own Cesium exposure at Sirmac. You looking to commence summer exploration. What are your thoughts there, Chris?
We're just about to start in the next day or two at Sirmac. And if you recall, late last year, we got some fantastic results from some channel sampling on a particular outcrop we discovered last summer. And it came back with very pleasing values of cesium. We've had Dr. Nigel Brand that Power Metals uses as their cesium expert have a look. He suggested, in conjunction with our own geologists, and in fact with some recommendations from Power Metals, recommend an exploration program to widen the sphere and look at other outcrops we've since discovered. And pleasingly, we've discovered tracks all the way in there, which weren't previously apparent. So it means we can access the area definitely in summer without the need for helicopters. So we're going to do a couple of week program, some more channel sampling, and cover all of the surrounding areas and the outcrops we see looking for cesium. It's about a 2-week program, and then 6 or so weeks after that, we expect results. And that will inform any future exploration, particularly drilling we do, which could be as early as before the end of this year, depending on what the results look like. But we think that gives us a very complementary commodity to look at within our existing portfolio.
Yeah, I mean, it seems like Canada has an advantage globally as far as cesium goes.
It does, yeah. I think Canada has been one of the only producers through the Tanco facility in Manitoba of cesium in recent years. That's recently stopped, and as far as we know, there's no current producing cesium mines in the world. Power Metals just put out their maiden resource for the Case Lake project, which is now the only active cesium resource in Canada, and we hope to follow suit with that. The beauty of ours and the beauty with the Case Lake project of Power Metals is that it's at surface. It's easy to get. It's an open pit operation, and the ability to mine that is relatively low risk compared to larger or underground operations.
Yeah, and that will require, with our discussions with them, Chris, that's a lot lower capex.
Very low capex. The concentration's relatively easy. The open pit nature of the mining is very easy. For them, as with us now at Sirmac, it's relatively new infrastructure, so it's not hard to get the product out. And initially, we're not talking huge volumes, but see, that's not the nature of cesium. All the recent cesium mines that have been exploited have all been mined out within a year or so, but that provides several years' world demand.
Yeah, I mean, although it sounds like, having chatted to others, that, I guess if you can create supply, it can create its own demand.
Yeah, exactly right. And we think that yes, there's cesium. There are other sources of cesium, certainly in Canada, in Quebec as well. But the ability to access them quickly, I think, is the key over the next 3 or so years.
Right. Howard?
All right, Chris, just doing the math of what you just talked about. Adina, you've invested $50 million. Your stake in Power Metals is worth $20 million, and you have $18 million in cash. So that's $88 million in replacement value, and you're trading at 35 million Australian dollars. What's your cash burn on like that 18 million in cash if you're not going to exercise the Adina option? I'm sorry, the Renard option.
It Well, I suppose it depends on how much emphasis we decide to put on Sirmac, and we yet to decide exactly what our emphasis is going to be on Adina as well. So, firstly, with Adina, our base case is completing the environmental surveys and ticking all the boxes to work towards the requirements of the environmental and social impact assessment guidelines that we just received. And we're doing that. In fact, right now, we've got a survey starting this week, another fauna survey along the road and out towards Adina. So that's our base case scenario. We're doing some exploration on the ground, and we're analysing some results from late last summer till sampling at Adina, trying to decide whether we increase the quality of the knowledge of the ore body at the moment, or whether we try to increase the tons if we do some drilling later this year. It's arguable as to whether either of those will have an impact on the share price in the current market, but nonetheless, we're trying to balance cash expenditure along with preparing ourselves for when the market does turn and making sure we've got a very high quality project. And it's probably the same with Sirmac. We're doing initially this week, commencing that low cost on the ground summer exploration work at Sirmac. And if that's successful and we're guided this way, then we may well do some drilling later in the year. So it's hard to predict at the moment where we think we'll get the value and therefore how much we'll spend. But we're certainly very much in a cash preservation mode. The $18.5-ish million we have right now, we are protecting that fiercely, and we are only spending money that we think will bring near-term value to shareholders, because we think despite what is shown in our share price, that bank balance is one of our most important assets at the moment.
I'd agree with that. You never know how long these downturns will stay. So, yeah, from a dilution worry perspective, keeping a healthy balance is important. You mentioned you've had a lot of strategics visit the site. I don't know, you said 24. Last year, it was only just 6 months ago, I think Volkswagen, wrote a check into Patriot. There hasn't been a lot of strategic investment in the sector. A couple of counter-cyclical things, obviously Rio buying Arcadium, and maybe the oil companies playing around in the smackover, but in Canada, not too much. So how would you characterize the status of those conversations? It's a lot of site visits. Everyone, is aware Quebec is a good jurisdiction. Like, why do you think you weren't able to, structure a strategic deal yet?
I think the general view, if I can generalize the view of the many strategics that came to site, I think it's that they're all sitting on the sidelines waiting to see a turn. They would rather see a turn and pay, call it 20% more than invest at the bottom and then have to wait 12 months for it to improve. That tends to be the general view. And so with that thinking in mind, most of them are saying, well, we'll probably invest next year. Now, that doesn't suit us in the timeframes that we have to comply with for Renard. So I think that's the main reason we haven't received an external strategic at this point. And I think also there's a bit of waiting to see perhaps what Rio Tinto does, and perhaps how the Canadian government, specifically the Quebec government, weighs in on the conversion side. They've already done it with the current Rio facility at Bécancour. So there are Investment Quebec's a 40% owner of that. The Quebec government has indicated it would like to support the conversion industry much more in Quebec. And I think these strategics, well, I know that a lot of them have been having those conversations with the Quebec government and almost waiting for that further downstream component to be crystallized before they invest upstream with us.
Right. There's been a lot of uncertainty, as I mentioned before, both Trump election and then, tariffs and the start of his administration, and then the election in Canada, of Carney. So I think these overhangs have been priced into not just your stock, but a lot of the Canadian juniors in lithium. And again, I think a lot of that's already priced in. So a lot of negative news, contained within the stock. For Renard, you won, in a bankruptcy auction. Are there other prospective bidders? Like, if you don't exercise this option, what do you think? Like, who else might take over, see value in a mothballed diamond mine? Or are
We
you
don't
really the
think
only option?
we think we're the natural buyer, and we can't see any others who may take it. There is a care and maintenance burden. There's no one else with a resource nearby, and certainly not one that can directly use those facilities as naturally and as well as we can. Um, in fact, the option that we have on Renard ceased to become exclusive at the end of May, which gives the current owner, Stornoway, the ability to seek other buyers, and that hasn't happened yet. But we've certainly examined the landscape, and we don't think there is anyone else. We think if we don't take it, then there's the very, very real reality that the current owners will have to go into bankruptcy, and it may have to be rehabilitated, which we think would be a terrible outcome for Quebec in general.
Who are the current owners?
So the current owner is Stornoway owns the mine, and Stornoway is owned 35% by Investment Quebec and 15% by CDPQ. And then a Cisco Gold Royalties owns another big chunk of it.
Okay, so 50% are owned by the IQ is a government, funded investment fund, and CDPQ, that's also a pension fund for Quebec. So
Exactly.
basically
Yeah.
50% of Stornoway is owned by the Quebec government or
Their
so,
entities.
and
That's right.
they're the ones paying the annual care and maintenance costs, which are what, a year?
Um, what it currently costs and what we think we would cost are two different things. Um, it's the current costs are not public. Um, we think if we were to take it over, we can do a lot of things to significantly reduce care and maintenance. We think we can not only pursue the carbon dioxide removal hub premise over the next couple of years, and that'll bring in various contractors, new technologies, the ability to use the infrastructure and therefore offset the costs of care and maintenance. But we also think there's training opportunities for local people, local First Nations groups, particularly the Cree Nation of Mistissini, who are the nearest First Nations community to us. We think there's an amazing opportunity, particularly with the institutions that they have available, the training opportunities, and the funding that's there. If we can apply that to the facilities that we will have at Renard, then again, there's the ability to not only train local people, prepare a workforce when we do get our approvals, uh, but also defray some of the costs of care and maintenance along the way.
Right. Okay. I mean, look, the government already owns it, like they own a stake in Nemaska, and the government is partners with Rio Tinto on that project. I mean, could you see an outcome where you rework a deal where you don't have to pay $55 million and you don't have to assume all the cost yourself, but you're somehow partnered with the Quebec government, and maybe they continue to pay the maintenance cost, and then maybe they have a stake in Winsome, and you're developing this kind of together?
I think having the government as a partner, perhaps at the project level, for example, would be an ideal outcome for us, as you say, in the same manner that they're partnered with Rio currently. Um, they're the sort of conversations we're having with them. I think it starts with when we struck this deal in the early part of last year. The landscape's changed since then, and we don't think that deal it was valid then. We don't think it's valid for us now and our shareholders. So it's got to be reworked in some way, and we're investigating ways that might happen.
Right.
But yeah, that sort of thing would be. I can't imagine a better strategic partner than the Quebec government in some form or another.
Okay. And it doesn't look like they have, many other options at the moment. So it's a bit of a discussion, negotiation in light of the realities of the lithium market, right? When you struck this deal in 2024, lithium had started going down, but everyone thought, it could rebound. And with that long dated option, you'd have enough time to raise the 55 million, and lithium prices would be higher. and you'd be rapidly advancing, the lowest capex, hard rock project in, the province. But, realities are the realities in lithium land. We're constantly surprised by the duration of this downturn. And, maybe you'll get a better deal for Renard, for Winsome shareholders. And this is where we are in the cycle where, fortunes are made and lost. I think I've said, you win some, you lose some, and you win some again with Winsome Resources. Here we are, below IPO price, and frustrating, but, you've done a lot, Chris. As I said, you made a major discovery. You made an astute deal with Power Metals. Market's not giving you any credit for that, in my opinion. And Renard is a great deal that's just unfortunately become a victim of the current market environment. But anyway, thanks very much for the update. I don't have any more questions. Is there anything else you want to? I know, Chris, you wanted to cover some of the maybe macro for lithium, but I'd point our viewers to a lot of the interviews we've done with YJ Lee or Ken Hoffman, who have expressed, very significant bullish cases, for lithium. And Matt Fernley has been on. He's more not as bullish as them, but I think he still forecasts. He does agree with us that stocks are oversold. But would like to see, some further supply cuts or, the demand. You've articulated, Chris, that, some of these ESS and other applications may not be reflected in the demand forecasts. And I think Rodney agrees with that. But the reality is commodity equities follow commodity prices on a day-to-day, week-to-week basis. And whether or not, the analysts are forecasting wrong, the market will reflect that wrongness, with much higher prices once it's reflected in the rising lithium price, which has happened over the last kind of 8 or 10 days. Lithium prices have ticked up. You have seen some short covering or the end of the June 30th is the end of the fiscal year in Australia. So a number of stocks, often, trade up or there's a repositioning of portfolios. We might have seen that, your stock went up 22% one day last week, but still too early to tell. But for viewers who have watched us, and this is a very interesting story that's frustratingly, fallen to an extremely low market value, 35 million Aussie versus 88 million of invested capital, I think. And so not investment advice, but, look forward to better times and interviewing you in a few months or weeks, depending on news flow, Chris.
Yeah, thanks, Howard. Thanks, Rodney. I think the final point, directly as you just said, Howard, we saw a very good jump last week when I think futures and spot both lifted on the same day. Everyone got a circa 10% jump that day. We were significantly higher, and I think that's starting again. It's a part of this positioning of our announcement a few weeks ago that we're not taking Renard at all costs. We've still got this fantastic deposit on its own, and we're still advancing that in the background. I think that should remove any perceived overhang that was there with Renard. We'll take Renard if it works out right for us, and I think that's it starting to flow through into our share price, and hopefully that'll continue over the coming months.
Sounds good. Thanks very much, Chris. Great seeing
Thank
you
you
as
both. Great to
always.
speak again.
Okay. Talk soon.
Goodbye.